If you're over 40 and feeling the pinch from sky-high interest rates on credit cards and loans, often averaging a staggering 21%, draining your hard-earned funds month after month, there's a powerful strategy to turn the tide: negotiating for lower rates. Astonishingly, 83% of people who simply ask their issuers succeed in securing reductions, according to recent CNBC reports, potentially saving thousands annually and redirecting that cash toward building savings, retirement, or other wealth goals. In midlife, when career stability meets lingering debts from life events like home purchases or education, this approach empowers professionals to regain control without drastic measures. By leveraging good payment history, loyalty, and competitive offers, you can slash rates significantly, easing financial burdens and accelerating your path to security. In this video, we'll equip you with proven steps, ready-to-use scripts, and insider tips tailored for busy pros tackling debt head-on. Whether it's preparing your case or handling denials gracefully, these tools will boost your confidence and effectiveness. Don't let high rates hold you back any longer. Let's dive in and start saving you real money today, paving the way for a brighter financial future in your prime years.
Hi, welcome to SmartCents. In this channel, we talk about personal finance for mid-career professionals over 40. This is for people who think they've missed the financial bus. We're here to show you it's never too late to hop on and accelerate toward wealth.
Preparation is the cornerstone of a successful interest rate negotiation, particularly for individuals in their 40s who often have an established financial history that can be leveraged effectively. With years of account management under your belt, thorough prep transforms a simple request into a compelling case, boosting your chances of approval to an impressive 83% as reported in consumer surveys from sources like LendingTree and CNBC. Begin by bolstering your credit score to 700 or higher, a benchmark that significantly strengthens your bargaining position. According to Credit Karma, achieve this through consistent, timely payments on all accounts, reducing utilization below 30%, and disputing any inaccuracies on your reports, actions that demonstrate reliability to issuers. This not only enhances leverage but also qualifies you for better terms amid midlife priorities like retirement planning or family expenses. Next, research competitive offers online via sites like Bankrate or NerdWallet, identifying lower rates such as 15% APR promotions from rival lenders. Arm yourself with specifics to counter your current issuer's rates persuasively. Emphasize your loyalty. Highlight long tenure, e.g., 5+ years, impeccable on-time payment records, and responsible usage. Gather recent statements as evidence, showcasing low balances and no delinquencies. This comprehensive positioning favors positive outcomes, turning potential denials into reductions that save thousands annually. Without such groundwork, negotiations often falter due to perceived risk. Empower yourself now. In your 40s, these steps unlock midlife savings, easing debt burdens and redirecting funds toward wealth-building goals like investments or emergency reserves confidently. Calling your credit card issuer directly is one of the most effective ways to negotiate a lower interest rate, offering a personal touch that emails or apps often lack. Start by locating the retention or customer loyalty department, often listed on the back of your card or via a quick online search for Issuer Name Retention Line. This specialized team is empowered to make concessions to keep valued customers, especially for midlife professionals with established accounts. Once connected, open politely. Introduce yourself and express appreciation for the service. Then, highlight your loyalty, mention how many years you've been a cardholder, and your strong payment history, such as consistent on-time payments and responsible usage. Be specific with your request. Ask for a targeted reduction, like dropping from 23% to 18% APR, backed by your positive track record. If initially denied, calmly reference competitive offers from other lenders, such as a 15% rate you've seen advertised, to strengthen your leverage without aggression. Throughout, maintain politeness and persistence. If needed, politely ask to escalate to a supervisor, framing it as seeking the best solution. This approach humanizes you as a loyal, reasonable customer rather than a number, often leading to approvals or alternatives like temporary reductions. For those over 40 rebuilding finances, securing even a small cut can save hundreds monthly, freeing funds for investments or retirement, turning a simple call into a pivotal step toward debt relief and long-term wealth confidently. Using a well-prepared script can significantly boost your confidence and success when negotiating lower interest rates on credit cards or loans, especially for midlife professionals over 40 aiming to ease financial burdens. Here's an effective example to adapt. Hello, I've been a loyal customer with your company for X years, consistently making on-time payments and maintaining responsible usage. I'd like to request a reduction in my current 23% APR to something more competitive, like 18%, to continue our relationship. I've seen offers from competitors at 15% that are tempting. Always highlight your positives up front, such as your payment history and account longevity, to build a strong case that positions you as a valued customer worth retaining. If the initial request is denied, don't give up, politely inquire about alternatives, such as a temporary rate reduction for 6 to 12 months or a waiver on fees to bridge the gap. According to insights from Capital One and similar issuers, this structured, polite approach succeeds frequently, with up to 83% approval rates in surveys when backed by preparation. Practice the script aloud a few times to deliver it naturally and assertively, reducing anxiety and increasing your chances of securing savings that free up cash for wealth-building goals like retirement or investments in your prime years. This simple tool empowers proactive financial management without confrontation. If your interest rate negotiation is denied, don't lose momentum. Several robust alternatives can still minimize the impact of high-interest debt and keep your midlife financial recovery on track. First, consider balance transfer credit cards offering 0% introductory APR for 18 to 21 months, such as the Chase Slate Edge with its 18-month promo on transfers, as of November 2025. This allows you to shift balances from high-rate cards interest-free, providing breathing room to pay down principal without accruing extra costs. Ideal for professionals juggling expenses, but watch for transfer fees, typically 3 to 5%. And ensure repayment before the promo ends to avoid retroactive interest. Next, explore debt consolidation via personal loans, with average rates around 12 to 15% for good credit per NerdWallet and Bankrate data in late 2025. Platforms like Credible can help secure fixed-term loans to combine multiple debts into one lower rate payment, simplifying management and potentially saving hundreds monthly on interest for those with stable income in their 40s. Finally, turn to credit counseling agencies for debt management plans, DMPs. Nonprofit organizations negotiate with creditors on your behalf, often securing reduced interest rates, down to 5 to 9% in many cases, and waived fees, as highlighted by Bankrate. DMPs create a structured repayment schedule over 3 to 5 years, ensuring steady progress while protecting your credit. These backups empower continued advancement, turning setbacks into strategic steps toward debt freedom and wealth rebuilding without derailing your goals. Tracking your results after a successful interest rate negotiation is essential to fully realize the benefits and maintain momentum in your midlife financial recovery. Begin by closely monitoring your monthly statements to verify that the new, lower rate has been applied correctly. Oversights can happen, and catching them early prevents unnecessary interest accrual. Once confirmed, calculate and note your actual savings. For instance, reducing a rate from 23% to 18% on a $5,000 balance could save you around $100 monthly, adding up to $1,200 annually, freeing up significant cash flow amid career and family demands. Make renegotiation a routine. Every 6 months, reassess and reapply as your credit score improves through consistent payments and responsible habits, potentially unlocking even better terms. Redirect these newfound savings strategically. Funnel them into retirement accounts like a 401k or IRA, high-yield savings, or investment funds to harness compounding growth. For professionals over 40, this proactive tracking transforms one-time negotiations into empowering habits, compounding wealth over time by minimizing debt costs and maximizing future security. By integrating this into your financial routine, you'll build resilience, turning potential setbacks into steady progress toward a debt-light, prosperous midlife and beyond. When you're handling sensitive financial or negotiation-related conversations, the most important principle is to avoid impulsive mistakes. Staying calm, composed, and factual should always be your starting point, because emotional reactions or aggression almost always work against you. People tend to respond defensively when they feel attacked, and that can close doors that might otherwise lead to better outcomes. Instead of raising your voice or issuing threats, focus on clear communication and evidence-based points. One common mistake is bluffing, especially threatening to close accounts, cancel services, or walk away without having a real backup plan. These tactics rarely work and can even put you in a worse position if the other party calls your bluff. A much smarter approach is to prepare alternatives in advance, such as transferring balances, exploring competitor options, or restructuring commitments. Having real options gives you confidence and strengthens your position. As CNBC and multiple financial experts point out, persistence combined with politeness is one of the most effective strategies in negotiations. Professionals who consistently adopt this calm, strategic, and respectful approach tend to achieve better long-term results. They preserve relationships, open pathways for future discussions, and secure outcomes that are far more favorable than those won through force or frustration. You now have effective negotiation tools to help lower interest rates and protect your midlife savings. Download the free guide below and start reducing financial stress with simple, proven steps many people successfully use. If you find this helpful, remember to like and subscribe for more guidance. Up next, we'll cover essential investing basics to strengthen your long-term financial foundation.